So it's retirement time. You're 62 years old and you decided you're going to upgrade your lifestyle. And people have been talking to you about a HECM. So is that important for you? Or maybe you're on the other side. You have decided to downsize your home at retirement and use a HECM. Today we're going to break down the ups and downs of a HECM at retirement. Welcome. I'm Kenneth Manessi with KeyToVegasHome.com, powered with EXP right here in Las Vegas, Nevada. And today on Inside Secrets, we're going to double your pleasure. We got two experts on HECM, and we're going to talk about and break down if you're upgrading or downsizing the benefits of a HECM. So we want to welcome to the show Rob Cook and Susan Laliberte, both from Longbridge Financial LLC. Welcome to the show, guys. And Susan, we'll go with you first. You are a repeat guest. Obviously, we enjoyed the information that you brought us last time. So welcome back to the show, Susan.
Thank you. Thanks, Ken. It's nice to be back. And Rob Cooper, he's one of our experts in the purchase area. So I invited him along today. So thank you for having both of us.
Well, Rob, welcome to Inside Secrets, and give us a little brief history, Rob, about you, because obviously we already know Susan, but help us understand a little bit about how you got into space and what you are doing at this time with Longbridge Financial.
Yep. So thanks, Ken. So thanks for having me, first of all.
Yep.
I got into the space solely doing reverse mortgages back in 2008. I have been doing nothing but the reverse purchase product within the reverse mortgage industry since 2014, so 9 years. And I am responsible for the reverse purchase product across all of our channels within Longbridge Financial, who is a monolined reverse mortgage lender, issuer, servicer. And that's where we are today. And that's why Sue had asked me to if I'd want to come on with you guys and maybe be able to provide some kind of value. And here I am.
Well, thank you. We appreciate that. And I opened the show with upgrading and downsizing. So we're going to split this and give you guys both an opportunity to talk about that. So Susan, let's talk about that. Let's talk about downsizing. What we find is at 62, our knees hurt. We got a two-story home. We're going up and down the stairs. We decide it's time at retirement to sell that two-story and downsize, get a one-story, and help our knees. How can we use a HECM to do that? Help us understand what that looks like.
So the HECM for Purchase is a great product, and it's really taken off this year for our company. I don't know about others, but Rob can attest to that. It's a great way to, if people don't want to stay in their homes and right size them. It's kind of hard to right size a two-story house, right?
Right.
So, there's other things you can do for a home, the walk-in showers and the grab bars and getting it ready to age in place. But with a two-story, it's a whole different story. So selling their current home and purchasing a smaller home, a one-story, a bigger home, one-story, whatever the case may be. So there's just so many agents and clients that I talk to out there that just don't know that anything about the purchase product, and it's been around since 2009. So we've just really been trying to get the word out there and do a lot of education. Hence Rob being, brought onto our team to kind of head the purchase side up. And Rob can attest to a lot of the, the back end stuff that goes on. And it's a smooth process. I just got done doing a reverse. The gal had a reverse on her current home. The agent sold that home and she purchased another home with the reverse mortgage for purchase. So it was just a great, smooth transaction. We've got a great purchase team, so we're ready to go.
And that rings a lot of bells for people. I know that by just listening to you, I heard people's thinking out loud. And one of the things that they were saying was, well, wait a minute. They had a reverse mortgage, they sold their house, and then they bought another house. So let's dispel the myth. When you have a reverse mortgage, the bank doesn't take your house. Help people understand, Susan, what happened with that client so that we can get rid of that myth and start helping people see the reality of using a reverse mortgage, what we call a HECM. And could you give us what we use, the abbreviation of HECM, what that actually means?
Yeah. So the HECM stands for Home Equity Conversion Mortgage, and that is FHA's product of the reverse mortgage. So it's just kind of a fancy term there. So yeah, that's one of the biggest misconceptions is that everybody I talk to, almost, I would say 98% of people think that the house just simply goes back to the bank, no matter if you have equity or if you don't. But that is so far from the truth. You can sell your house, um, uh, pay off the reverse mortgage, take the rest of those proceeds, your equity, to move forward, to go into another home. So huge misconception.
Yeah. Yeah. And that's what people don't understand about equity. First, we're taking equity and turning it into liquidity so that you can use it at retirement. And then secondly, if the home's value goes up, that equity is still yours. It's not the bank. The bank doesn't own your house. Actually, we know, Susan and Rob, the bank isn't on title. They don't own the title to the home. They're actually just giving you, based on the equity in your home, either the three possibilities: a lump sum, a monthly payment, or a line of credit for that equity. So, Rob, we talked a little bit about upgrading your lifestyle. So, how does that work? How can you use a HECM to upgrade your lifestyle?
So I think the best way, Ken, to describe that is to tell a story,
Sure.
right? And visualize it. So, and this is very normal for most of the purchase customers. They've been in their home 20, 30, 40 years. It's too much to keep up with now, or they want to retire, or they want to move closer to family and friends, which is a big reason the baby boomers we're talking about in particular are moving. And they want to say, oh, you know what, I don't have any mortgage, I'll make it up, get $500,000. I'm going to make $500,000 on the sale of my home. I'm going to go buy cash. Well, where they're looking to buy cash now, prices have risen in a lot of the areas of the country. It's not really the kind of home that they want, right? But once they're introduced to the reverse purchase product, now all of a sudden their buying and their purchasing power has grown significantly. So I'll give you an example. That same example, $500,000 in proceeds that I have in my hand. Now I can go and look where I'm looking Las Vegas. I'm moving from California. I'm looking to move to Las Vegas, and I see a home for 650,000. Well, right now with today's margins, the customer's bringing roughly between 60 to 65% of the sales price to that home, to purchase that home. They're keeping that other 35 to 40% that they made in their 500,000 proceeds, putting it into their portfolio, helping them with their finances. And that's a big concern, especially with the boomers and those going on fixed incomes. That's a concern. Am I going to outlive my money? We're all living longer. What happens if an emergency happens? Do I have enough money? This is mitigating a lot of those concerns for a lot of the customers. So they're upsizing into a community, may be highly amenitized, first floor living. They have all the things that they want in life in retirement age. And most importantly, they don't have that monthly debt service of having to get a regular mortgage. So that's a stereotypical type of scenario that we see on a daily basis. And Susan is probably talking to those people on a monthly basis as well.
Yes. So I want to just help people understand what you just said. And I want to kind of just make sure that people understand this idea of no house payment. I mean, for so long, we've talked about a forward mortgage. We went to the bank, got a mortgage on the home. They held title until we paid it off. Now you are just outlining for people that they can buy a more expensive home. The bank's still not on title and they have no house payment. So why would a bank do that, Rob?
So and I want to, I've heard it a few times with what you were talking with Susan, and you had said it, Ken. But one of the things I say when everyone asks me, oh, I thought the bank owned my home. I said, it's a reverse mortgage, just like the mortgages we've all had our lives, right? It's a mortgage. The bank doesn't own your home with the traditional mortgage. The bank does not own your home in a reverse mortgage. That's number one. I just had to get that out.
Sure.
Number two, so what happens is it's not free. Okay. Nothing in life is really free, right? So instead of making a monthly mortgage payment, the interest rate that you're being charged on this mortgage, the reverse mortgage, is being added every month. So if you're not going to make a payment, and you can, by the way, you can make as many payments as you want. You can pay off the loan. So it's giving the customer more flexibility with their finances. So, but most do not, right? And what happens is that the amount that's owed each month just keeps getting added to the back end of the loan. So when there's a quote maturity event, someone passes away, the owners pass away, they move, whatever's owed just has to be paid back from the sale of the departure or from the sale of the home.
Right.
And that's how it works.
Susan, you had just said that, and I want to help people understand, just like what Rob was saying here, that when they had a reverse mortgage and they sold the home, they were allowed to keep that equity. Again, why would a bank allow that to happen? I mean, we've heard all the horror stories about reverse mortgages. They come take the house. People, it's the body's not even cold yet. And then there's the mortgage company trying to get the house. That doesn't happen. But yet the case that you said, people were allowed to use the equity and then buy another house. So help people wrap their minds around this idea of that's possible.
Yeah. So you can only have one reverse mortgage at a time. It has to be your primary property. So in this situation, she was actually selling that home and purchasing another. That's when the bank, the lender, basically makes their money. That loan gets paid off with the interest that was added to the back end of the loan. So the bank is being satisfied in full for any of that credit line that she had used. So she was already in her home, right, when she did a reverse refinance, her old home. And let's say she got a credit line of 200,000 and she only used 100,000. So that 100,000 was having the interest added to the back end of the loan, as Rob explained. And then that is what becomes paid, due and payable on the sale of the home. So the bank has been satisfied for the money that they lended. So the rest of the equity is hers. She walks away and does the purchase with that money. The loan has to be satisfied, as Rob said, only with the sale of the house. So in another situation, that's probably a whole nother conversation. If the loan is upside down and they've had the loan for over 30 years and they owe more than the house is worth, they would not have to pay that. They would only pay back 95% of whatever they could sell it for or it appraised for.
Right.
So that's kind of a whole getting off topic a little bit there. But back to your question, the bank has been satisfied. They got paid back whatever money she used plus interest. Just like a traditional loan, right? They're getting their money.
And this is one of the things that I'm trying to get people to understand in this space is that, listen, if you've been banking on your 401 or your pension and you have uncertainty about what that's going to look like or perform at retirement, here's a possibility for you to use your equity, turn it into liquidity, and change your life, either upgrade or downsize. This is a possibility, but here's the problem. There's a lot of misinformation and bad facts about this. And the reason why we're doing this show is to get experts just like Rob and Susan on here to help people get through the fog and understand the truth of what is possible at retirement. Rob, you had said that this couple had upgraded their lifestyle. So, obviously, they had taken the equity and bought something even greater. What does that look like for them, say, for the next 20 years? Are they having to worry about their new home being lost again to the banks, or what does that look like?
No, it's just like a typical mortgage. It's when someone gets a regular mortgage and they've had that for 20 years. The difference is typical standard traditional mortgage, which we all know, which is very transactional. We've grown up with it. They're making payments. With a reverse mortgage, HECM loan, they're not making payments. It's being added onto the back end of the loan. Everything else is identical, quite frankly. It's just the way that the payments are being made. And one of the things that I often hear as well is, well, that's going to eat into the asset of my home and my equity. And we're concerned about that. And that's a fair statement. If someone is looking to purchase a home and they are dead set on that home being given to their family or their heirs or their estate, then maybe this might not be the best, the best financing option. But there are other variables that we can get in. And again, as Susan said, maybe in a different podcast, line of credit growth and being able to take that, which we won't get into now, but it's not for every single client, nor is any traditional mortgage, right? So it's really just right now, especially this product, as Susan stated earlier, we're starting to see this really grow at Longbridge, and we're starting to see that in the industry start to grow this year. And the reason is because of the economic conditions that we're in. People are scared of what's happening with the economy, fears of recession. You're hearing of dollar devaluation. You're hearing all of these things that are making people very, very timid to do anything, especially buy a home. When this product is introduced, this financing option is introduced to those baby boomers, which, by the way, I think last year was about 40% of the entire market. So it's a very big market. And they have a lot of equity, trillions and trillions of dollars of equity, but they're worried about what I just said, the aforementioned concerns. So when this is introduced, many of them, those feelings are mitigated. The being scared and the trepidation of moving, am I going to have enough money? They're mitigated because, as I said earlier, in most cases, they're keeping a pretty significant amount of the proceeds on their departure home in their bank or in their portfolio, in their savings, and they don't have to make that monthly mortgage payment.
Yeah. And at retirement, that's just huge. I mean, that's the first thing that we think about. Even when we don't talk about retirement, we talk about how much house can you afford each and every month. And at retirement, that's really very important when it comes
Very.
down to the questions that people have in regards about using this product. And that's why I want people to sit down with experts like you and get their questions answered. Don't Google it. Don't go and talk to a relative or a friend or a neighbor that hasn't been in this space as an expert. Get with an expert and find out if this is something that is going to be able to help you at retirement. If you're upgrading or if you're downsizing, regardless of what your future plans are, take a look at this, sit down with an expert and find out, is this right for me? You guys, real quick before we leave, I had one question. I had one of my clients that was sitting down at the table. We were discussing this, and they asked this question about Medicaid. They said, well, wait a minute. Is this going to affect my Medicaid? Rob, could you just answer that question for them real quick?
It could. It could. I am not a Medicaid expert by any means. I would certainly consult anyone that had this question to speak to a Medicaid expert, attorney, CPA, whoever that may be. But it could, and it depends on how much money, like how you get your money. And I think, Ken, you mentioned it earlier, you can get it in a lump sum. If you did that, probably a pretty high probability that that's going to affect your means. I think Medicaid does a means testing, and you can only have in 2023. I think it is $8,400 for single in regards to bank account, and up to $12,600 for a couple. is their means testing. And that varies. In certain states, they're a bit more flexible. In other states, they don't have any. But I think the majority of the states have that as their means testing. So if you get a big lump sum, in Susan's example, $200,000 was taken out. If the means test, that's going to make you ineligible for Medicaid. Now, there may be ways that you can, working with the Medicaid expert as well as with someone like Susan, that is a reverse mortgage expert, maybe you could work out a time where you could take monthly draws where you're not over that and you don't have that amount, utilizing the line of credit so it's not sitting in your bank.
And
So,
that's why, and Rob, that's so important for people to hear. And that is that there are many questions people have in regards to this product and retirement. And that's why they need to do just that. So what I want to encourage people to do is reach out. I'm going to put all the contact information below here. Make sure you reach out. Susan, you're located right here in Las Vegas, correct?
Yes, I am.
Excellent. So they can reach out to you. They can sit down with you and ask their specific questions to make sure this is right, so that at retirement, they can plan for upgrading their lifestyle or downsizing their home and finding out exactly their questions answered so that they can have peace of mind at retirement. Let's face it, folks. When you're retiring and you've set aside and planned on your retirement funds, your 401, your pensions, your Social Security, I want you to consider now a HECM in that to see if that is something that's going to help you live the lifestyle you want to live, and more importantly, have peace of mind at retirement. Rob, Susan, thank you so much for being on the show, Inside Secrets too. Again, we're going to put all their contact information below so that you can reach out to them. And I want to ask you to go ahead and go to keytovegashome.com. I wrote a book on this so that you can hear the stories. All you have to do is go to the homeowner tab, click on it, and you can download a copy of the book for free. Or if you put your address in, I'll give you a hard copy. I'll mail it for free so that you can have the information you need to help you make the right decisions at retirement. Rob, Susan, thank you for being on the show.
Thanks, Ken. I appreciate it.
Thanks, Ken.
You guys, will talk to you soon. And don't forget, go to keytovegashome.com right here in Las Vegas. We'll help you make the right decisions for your next purchase, or if you're selling your house, to upgrade or downsize in here in Las Vegas. Thank you. We'll see you soon. Bye for now.